Ladies and gentlemen, good day and welcome to the Q1 FY25 earnings conference call of Alembic Pharmaceuticals Limited. We have with us today Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. R.K. Baheti, Director, Finance and CFO, Mr. Ajay Kumar Desai, Senior VP, Finance. As a reminder, this conference call is only for analytics and institutional investors. All participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. R.K. Baheti. Thank you, and over to you, sir.
Thanks. Good evening, everyone. Thank you all for joining our first quarter results for FY24-25. I'm sure you would have received the results. However, let me briefly take you through the numbers. During the quarter, our total revenue grew by 5% to 1,562 crores. EBITDA at 239 crores is about 15% of sales and grew by 14%. Net profit grew by 12% to 135 crores. Comparison is with corresponding quarter of last year. EPS for the quarter is 6.84 per share and versus 6.14 for the previous corresponding quarter. This EPS is for the quarter, not analyzed. Our gross borrowing is about 589 crores compared to 430 crores of March 24, and we have 147 crore cash versus 120 crore in March 24. I will quickly move to the business presentations and I would request Shaunak to take you through the India business.
Yeah, hello, good afternoon, everyone. For the quarter, India branded business grew by 9% to 572 crores. We recorded robust growth in our specialty therapies of gastroenterology, gynecology, anti-diabetic, ophthalmology, and we performed relatively better than the market in acute therapies. Excessive heat waves in Q1 led to unnatural market disturbances in specific affected geographies, and that was a negative for the business. Animal healthcare business continues to outperform with 23% growth for the quarter, backed by a basket of strong brands driving this outperformance. New launches also continue to do well as a category for us, with some key promising new launches that have happened in Q1. I would now hand over the discussion to Pranav for
Thank you, Shaunak. Our OST facility S1 was inspected recently by the US FDA. I'm happy to say it happened without any observations, underscoring our dedication to compliance and quality. The US business performed quite well and grew 18%. We had two launches during the quarter and expect to launch 10 more products during the quarter. The ROW business has a good outlook, and we've grown this business quite well over the last 5 years. It should return to better growth in the subsequent quarters. The muted growth was on account of constraint of supplies. The API business underperformed as compared to a higher base of last year. We hope to improve the growth in the subsequent quarters as well. R&D expense was 7% of sales at 114 crores for the quarter. We filed 3 ANDAs during the quarter, and the cumulative ANDA filings are at 262. We also received 11 approvals and launched 2 products in the US during the quarter. As mentioned earlier, we should launch about 10 products in this quarter itself. The US generics grew 18% to 461 crores for the quarter, whereas the ex-US generics grew 2% to 271 crores for the quarter. The API business grew by 15% to 260 crores for the quarter. With that, I would like to open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead, sir.
Thank you for the opportunity. Am I audible?
Yes.
So just on US, as we see the pace of launches, ramping up, and even the first quarter numbers has been better than the quarterly run rates the earlier quarters. So could you provide some guidance in terms of, what kind of run rate one should expect in FY25?
Tushar, so we're not giving a run rate, but we do expect, as I said in the last quarter at the end of the year, we do expect to grow the US business. I'd like to grow it by about 10 to 12%, 10 to 15% this year. And I think we'll hold that true. I think because it's a combination of the competition and the price erosion that we see. The last quarter was quite good, as you know, 18%. It's a good quarter. However, there was some lumpiness in that first quarter, which would not be a recurring basis. But we will launch about 10 products in this quarter, and hopefully some of the big ones might come also. So let's see how that goes.
Understood. And this timeline as far as Selexipag product is concerned, and if you could also highlight in terms of the contours or constraints for the launches.
Yeah, so Selexipag is still some time off. I think we're the first to file. We have a exclusivity on that. We're the non-NC-1 first to file on that. But there's still time for that. I don't think that launch is until FY26 or 27. So it's still early days.
Even if I go up to FY27, is it?
I think so. I have to just double check the date. I'll get back to you. I don't have it with me.
Okay. And for this product, for the API, in which case is, so in a sense, where is from a manufacturing standpoint, where does the key lie? Is it more of the formulation as a tricky or API as a tricky, per se?
The formulation. It was IP actually more than anything. It was an intellectual property and filing the product before anybody else.
Understood, sir. That's it from my side. Thank you.
Thank you. The next question is from the line of Damayanti Kerai from HSBC. Please go ahead.
Hi. Thank you for the opportunity. My question is again on the US. So you mentioned like you would expect it to grow in coming period, but I just want to understand how like supplies of getting pick up from the new plant, especially for the non-oral solid plant.
Yeah, so I think a lot of the growth still is from the OSD. I think OSD is still the largest part of it, but pickup from the new plants have been quite good. Some of them have done a little better. Some will still take a little bit more time for ramping up. So it's been quite successful. Hopefully by the end of the year, we will see a lot more products coming from these plants. In terms of the ophthalmics, the lines are running very well. The oncology is also, we've picked up some traction, and the general injectables is something that we're working on, especially the pre-filled syringes. We may see a few launches by the end of this quarter that should help it.
Okay, so very broadly, like what are your expectations in terms of sales split between OSD and non-OSD, say 2 years from now, very broadly?
Oh, we don't give that breakup, but what I can tell you is that going from about 4 or 5 years back to 100% OSD, gradually the dependence on OSD will come down and you'll see growth coming from the other sectors. OSD will continue growing as well, but it will still be more than 50% in the long run as well.
Okay. And can you also comment on the US pricing environment? Have you seen any change compared to last few quarters?
There's still pricing pressure. I would say double-digit pricing pressure. It's still there. We're still seeing that in the market.
Okay, but it's more product specific, right? Because what we are hearing from other is somewhere like mid-single digit, yeah. And my next question is, you mentioned constraint to supply was one of the reasons why we saw less ROW sales this quarter. And if that's the case, like how you're planning to resolve this?
Yeah, so you're right. I think we have the order book and the outlook is looking quite good for the US as well as the ROW markets. What has happened is we face some constraint in supplies. How we're addressing it is we do have the new formulation facility F4 that we built a couple of years back. So increasingly moving more products there, and we're ramping that up. And in F1, we're looking at debottlenecking some of the areas where we have constraints. So expect that in another quarter or two, should be back up to supplies, and ROW business will end up growing in the last couple of quarters of the year.
Okay. So maybe a quarter or two, and then you expect growth to come back in this segment.
Yeah, absolutely.
Okay. And my last question is on your margins trajectory. So we have seen gross margin in last 2 quarters remain broadly stable. So should we assume this level to sustain ahead? And also, if you can comment on the R&D expense. You earlier said 550-600 crore kind of is the number which you are looking for this fiscal.
So let's take the R&D first. I think R&D, obviously the first quarter has just been about 112-114 crores. But by the end of this year, it will ramp up a little bit more. So I expect to close at about 550 crores or so for this year on the R&D side. As regards the margins, as I said, we do expect that the margins over a 2-3 year period, we expect to go up closer to the 18 to 20% kind of ranges. And that will happen as the new facilities get better utilized, and we've already optimized the R&D. So the quarter-on-quarter, I wouldn't see last quarter was a little more lumpy because we have a few one-time benefits for the EBITDA. But on a year-on-year basis, you will see an improvement in EBITDA margins going forward as well.
Okay. And last, if I can, in the new non-OSD plants, your utilization is right now, below 30% or it's better?
Yeah, so it's tough to quantify, but yeah, it's not much right now. It's few streams are more, few streams are less, but that was built for future expansion. It was built for taking up the future capacities, and we're on track for that. We will start debottlenecking that and adding more areas there as well. As I said.
Okay, Pranav. Thank you very much for your response.
Thank you. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. The next question is from the line of Abdul Kader Puranwala from ICICI Securities. Please go ahead, sir.
Yeah, thank you for the opportunity. So my first question is pertaining to the US business. So out of the 206 products which have been approved, you have launched 149 so far. So the balance 57 products, would it be fair to assume that this would be mainly oral solids?
In terms of the total approvals?
No, I'm talking about the products which are yet to be launched, those 257 products.
Yeah. I think, as I said, we launched about 10 products in this quarter. Roughly half of them, in my opinion, would be oral solid. The rest would be some of the new areas.
Understood. And so in terms of your animal health business in India, so I mean, for the last couple of quarters, we have seen quite good amount of traction. So in the next 3 to 4 years, I mean, how do we see this business in terms of the overall contribution to the India business? And if you could throw some light in terms of, the segments which are currently working well for us.
Yeah, so I think in the animal health business, I think we expect to see a continuation of the momentum. As you're aware, we added a new division in the livestock space last financial year, and that's obviously giving us a little more traction and momentum in terms of sales. I think conservatively, we should expect to be in and around the CAGR that we've been generating now for the last 3 years. We expect that momentum to continue on the India business side of things. In terms of levers that's really driving in this business, like I said, some of it could be attributed to manpower expansion, some of it is through some new launches, as well as, I think, operational execution and discipline, I think, which is a more pan-India business strategy. So, yeah, it's a combo of these 3 things that's really helping us move.
Understood. And my final question is on the branded portfolio in India. So if I look at one particular slide on the therapeutic performance, your gastrointestinal growth has slowed down a bit as compared to the market growth. So any thoughts or colors here?
Sorry, could you repeat that question?
So, starting with respect to your gastrointestinal portfolio in India, if you look at one of the slides where you have given a comparison between the company growth of this portfolio as well as versus the market, the growth has been slightly below the market growth. So any thoughts or color you like to share, which would help us read to these numbers?
Yeah. So I think gastro, we don't, it's not a, I mean, like I said, sometimes, you just have some little bit of base or maybe a little bit of sub-market, segregations of where your stakes a little more, those markets don't do as well. Overall market doesn't do as well. But I think that that gap, I don't think it should be a major concern. I mean, if we expect to be smoothened out going forward.
See, it's broadly, there is no gap, like we grew at 12% and the market growth is also 12.6%. So broadly, we are in the line with the market.
Got it, sir. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Bhavesh Gandhi from Yes Securities. Please go ahead, sir.
Yeah, thank you for the opportunity. I had one question on the US business. So any update on the approvals that we had got in Q1? So products like Prolensa, doxycycline, and the peptide injectable, icatibant acetate. So any update on these three products, whether they have been launched or we are yet to launch? Thank you.
So I think we said we launched 2 products in the quarter, and we will launch about 10 in this quarter, and some maybe also we take, because they're not day one launches, so they'll all be launched they must be in a period of time.
Okay, fine. Thank you.
Thank you. The next question is a follow-up question from the line of Tushar Manudhane from Motilal Oswal Financial Services. Please go ahead, sir.
So thanks for the opportunity again. So this on the API side, wanted to understand this, is it to do with the excess inventory in the system or this is more customer specific?
So the API, the lower sales?
Yes.
The lower sales is due to, I mentioned a couple of quarters back that while the API business over a 5-year period has grown quite a lot, I think we had some few customer level shortfalls in the pickup that they did. I think there is due to various reasons. One, business was a little lumpy, that's why it'll come up at the end, by the end of the year. The other one is one of the customers had an FDA issue, which is why there was a little lower offtake. And third is there was some pricing pressure that we saw, which we lost some business. So, but I hope that by the end of the year, API business will go back up to growth, and I hope that this business I expect it to grow by 10% year on year after this.
So is that FDA issue resolved so that his offtake is back, or it will be subject to inspection?
So the FDA issue is not at our level; it is at a customer level, and I think it's not resolved as yet. And I believe that market share has got transferred to somebody else.
Understood. So effectively, sorry to drag on this, but effectively for us to scale up the business, will be subject to resolution of FDA issue for the customer, or in which case we will be able to still, the customer will be able to sell more in the market.
So I think it's just one customer. I believe we'll make that up with other business as we go along.
Understood. And so secondly, on the gross margin front, where the share of API business overall over last, you may look at year-over-year or a quarter-over-quarter, the share of APIs is been reducing, but the gross margin has been largely stable, at least for quarter-over-quarter, if I think about.
Yeah, that's right. And I think I have said earlier also that we'll be happy with 70% plus kind of margins. So every quarter it will be some product mix, some specific consumption patterns. You can't really. On a long-term trend, I think we would continue to be 70% plus.
Okay, sir. Thank you.
Thanks.
Thank you. The next question is from the line of Bharat from Equirius. Please go ahead, sir.
Yeah, hi. Thanks for the opportunity. So, sir, just wanted to understand on lenalidomide launch plans. So, when we are going to launch this product, is it going to be towards FY26 May or sometime later?
No, I think we're going to be much later. We were not in the first couple of waves, so I think we're still a good couple of years away from that.
Okay, but will it be a sizable opportunity for us whenever we launch it?
No, I think it won't be, because we'll be too late to the market. So that's not a product that will be sizable for us.
And is it based on some settlement? Because as far as I know, many companies have settled in such a way that they were going to launch before everyone could come. So before those volume restrictions lifted. So aren't we one of those who will be getting some value share?
No, I think, we were very late on this product, so I think there's a whole bunch of people before us. So our settlement is much later, and I don't expect there'll be much of a market left by the time we get in.
Oh, okay. And so talking from the perspective of US business, now what will be our top 4 or 5 product composition in our overall US business? Whether it is what proportion will be coming from those 5 products, top 5 products?
So I think we don't what percentage of revenue?
Yes, US revenues. Top 5 or top 10. I'm just trying to understand the concentration of the US market.
So I think the concentration for us has come down from what it used to be back in the days of the Sultans. I don't have the exact figure. I'll send it out to you offline. The top 5 also keeps changing depending on the opportunity, but I believe the concentration has come down quite a bit.
So actually, the reason to ask is because we have talked again double-digit price erosion, while our peers are yet talking about that price erosions have actually been very moderating a lot. So what is leading to this sort of price erosions for us? What difference we are seeing in the market?
Maybe we sell at higher prices than the others. I don't know, but that's what we're seeing in the market, product to product.
Right, and it is across the portfolio, not some specific product, right?
The price erosion is you extrapolate it, right? Because few products it will be double digit, few products it will be stable. You haven't lost anything, so it's tough to say. That's why when you all ask for price erosion, and when I do see price erosion, I'm seeing double digit. I'm not seeing single digit price erosion. And of course, some products we don't see price erosion.
Right, but at an aggregate portfolio level, you are seeing double digit.
Yeah, we're seeing price erosion. Yeah.
Right. And you talked about some lumpy revenue booking during this quarter. So are you even calling out the number as well for that?
No, we haven't quantified a number. It happens sometimes. Once in a while we get a one-time or maybe some supply-based or some third-party supply. So we get that once in a quarter. And I think every year we get it, or once every few quarters we get it. So it's just led to this.
Right. And our overall US business margins would have taken a hit last year because of new facilities. How long do you think it will take for us to turn our overall US business after deducting for R&D expenses to turn profitable?
So the US business has always been profitable for us if you take our R&D business out. It's just that the new facilities, right now, new facilities are shared across all our markets. If you add the new facilities in, that in spite of that, the generics business is still positive, still profit-making in spite of that.
Right. But at a group level, is there any outlook you are looking at? In particular time period, you will be turning overall profitable?
Business-wide profits. I mean, that becomes a unnecessary discussion.
Sure. And last one, on the other expenses, we have again seen other expenses shooting up during this quarter. So any number to call out and anything there sitting which might be one up?
So you would have seen some increase. When you say shooting up, probably on a QOQ basis, but on a YOY basis, it's like a consistent increase. So some expenses are a little more cyclic than others.
Sure. Thank you. That's all.
Thank you. The next question is from the line of Gagan Thareja from ASK Investment Managers. Please go ahead, sir.
Yeah, good evening, sir. I think in your introductory comments, you indicated that gross borrowings have gone up from the close of fourth quarter to now. Any explanations there? Is the working capital gone up?
Yeah. So a little bit of working capital has gone up. That is to prepare for new launches, which Pranav just mentioned in US. We have to create enough inventory, and also multiple plants are now in stream. So obviously the inventory levels at each of these facilities would add up to the increase in inventory.
In terms of days sales, inventory would also have gone up, apart from being in absolute values being up?
Number of days have also gone up because the sales will follow. Inventory buildup is preceding the sales happening. But I believe that by end of this financial year, by March 25, it should be back to normal again.
Okay. All right. And the tax rate also seems to have gone up year on year. What could be the full year tax rates, roughly to work with?
Full year tax rate to be at around 17% on a standalone basis. Depending on the subsidiary company's profits and the taxes thereon. But standalone, which is the largest part of the business, that is about 17%.
Right. And if I look at your standalone numbers, there's a very sharp jump in profits, which does not show up at a consolidated level. Any explanations there?
Largely the same reason that we have built up inventory in US for the new launches, and those products are now when they get to the market, it will be sold. So as of now, it's an unrealized profit in standalone books.
Okay. All right. And for India, any addition to sales force that you have planned this year, and what is the current sales force count?
So, no, I think we have done some additions already. We have created divisions and new division in gynec. We have done new division in cardiac. We have done. We have already done.
Yeah, it's done.
So now there are no major expansions planned in this year.
And what's the total sales force count as of today?
500 plus.
Right. And the PCPM would be how much?
Sorry?
The yield per month per man would be how much?
3.8 lakh.
2.3. Right. Thank you. I'll get back in the queue if required. Thanks for taking my questions.
Thank you.
Thank you. The next question is from the line of Harshit Dhoot from Diamond Asia. Please go ahead, sir.
Hi. Thanks a lot for the opportunity. 3 questions from my side. First one is on the interest too. We have received the approval on interest. So I just want to understand on the launch timelines and the settlement terms or litigation, how to understand when we can launch this product.
Hi. So on Entresto, we have settled already with Novartis. I think we're just awaiting the outcome of some of the others, what's going on. So we're going to wait and watch mode. Let's see if someone launches, then we'll decide if it makes sense for us to launch based on a settlement. But we've already settled.
But if the other guy was not able to launch, then by when we can launch at earliest?
As per the settlement, it really depends. It's tough to say, but we would wait for somebody else to launch because we can't launch right away. As per the settlement, our launch is later, but if somebody else launches, then we may get an opportunity to launch. So it's just, I think next couple of days, a couple of hearings going on, and we'll get a better idea in a couple of weeks' time.
Okay, got it. And one more thing on this, is the settlement related to the volumes or how it is?
No, it's based on IP.
Okay, got it. And the other part on the domestic business, excluding the animal health business, what kind of thoughts we have in mind? Can we outperform the IPM market by 200-300 bips, excluding animal health business?
Yeah. So I think I think that is the objective. I think I've always maintained that the India business under normal circumstances, over not on a quarter-to-quarter basis, but over a long-term consistent basis, we expect to outperform the IPM. And I think I've mentioned this in the past that my target is to deliver a few basis points higher than the IPM. Yes, it becomes a bit of a challenge, like it has been in Q1 and some of the quarters of the previous financial year, when the RPM and the IPM, there was a big dissonance in terms of growth. I don't want to get into the multiple reasons of why the market grew slowly, but against a normalization of the market, X of any large base, unmanaged base impact, or some extreme external circumstances like climate and such, I think if the RPM is in line, growing in line, I think we expect to outperform the IPM by at least a couple of basis points consistently.
Excluding animal health business, right?
Yes, excluding animal health business.
Okay. And the last one on the bookkeeping question, again, on the gross margin front, Bharati sir, we are anyways doing 70% plus from last 8-9 years, right? So, and this quarter, we were around 75%, last quarter also 75%. So, I just want the qualitative aspects on that. How should we read the gross margin in terms of mix? When US become heavy, then it will tilt more upwards or downwards. So just a qualitative statement on that. So the 70% plus is a big range, right? So just more comments on that, sir.
As I said, we constantly monitor it and we'll be happy with anything which is 70% plus. It had been between 70 and 74%. So now, for a specific quarter, it depends on our realization, that is the top line, the cost of material, the consumption pattern, product mix of production, and so on. So, I think we don't get into quarter-on-quarter discussion. Overall, 70% plus is good for us.
Okay, and in terms of the geography mix, which can move the margin upwards or which can put pressure on margins, let's say if US become heavy, which will be next quarter, then we can see some acceleration in gross margins, or it will be something like flattish. Just want to understand how gross margin is getting impacted by mix.
Each of these factors affect gross margins. Price erosion in US will affect the gross margins. A price rise in India will affect the gross margin. The cost increase impacts the gross margin. Any of these things or all of these things can happen or may not happen.
Okay. Thank you, sir. Thanks a lot.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. R. K. Bharati for closing comments.
Thanks, thank you everyone for joining the call, and always pleasure interacting with you, and look forward to see you again at our Q2 H1 conference call. Thank you all.
Thank you. Ladies and gentlemen, on behalf of Alembic Pharmaceuticals Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.